Welcome to the JD Power AI and Insurance podcast, where we explore how artificial intelligence is reshaping the way insurance companies serve, grow, and innovate. I'm your host, Michael Vermillion. Today's guest is Alex Valdes, co-founder and CEO of Findevor. Alex has taken a company from zero to IPO, transformed credit underwriting in the banking world with AI, and is now bringing that expertise to the insurance industry. At Findevor, he's building AI agents that help carriers improve profitability by connecting data, orchestrating workflows, and driving portfolio-level insights. In this episode, we'll demystify AI agents for insurance, explore real-world use cases, and look at how this technology is helping carriers and agents move from reactive to proactive growth strategies. So let's get started and dive in. Alex, welcome. Thanks so much for joining us today.
Thanks, Michael. Appreciate you having me.
So you've taken a company from zero to IPO, and now you're applying AI to some of the insurance industry's toughest profitability challenges. Can you tell us a little bit more about Findevor and the specific problems you're solving for carriers and agents?
Yeah, absolutely. So what we're building is a portfolio management platform to help property and casualty insurers run real-time book reviews. The problem or the process that we're addressing right now is the quarterly or annual periodic book review process. So this is at the end of the quarter. Data teams are getting together. They're looking at what happened during the quarter, gathering all that information, slicing it up, presenting it, and effectively surfacing narratives about, hey, we had a concentration of risk in a specific, let's say a catastrophe area, the Florida Gulf Coast region. What does that mean? What do we do about it? And is it good or a bad thing, right? They then hand over those narratives typically to what we're calling a portfolio management team. Usually consists of underwriters, actuaries, pricing folks, who then take those narratives and say, okay, now what are we going to do about it, right? Are we going to produce a underwriting guideline to restrict or expand appetite? Are we going to change pricing? Are we going to send this to reinsurance and so on? Effectively, what our platform does is we take that quarterly or annual process and we make it real time. We provide these carriers, reinsurers also, with effectively an AI agent. We call it a digital portfolio analyst who has access to their data. And as that data comes in, whether if it's structured, unstructured, even raw data, it's ingested by our system and is presented to the human user, to the human analyst. The agent then has context of the business. We build a large knowledge base for that specific carrier or for that portfolio, so that the agent can use that knowledge base as a context window to know what to do, right? So it'll then orchestrate a workflow using different data sets, proprietary or existing data sets that the carrier may have. It'll also use different tools that we provide, or even external tools, to ultimately get to an output, which is a recommended corrective action. So let's say we have a spike in claims for contractors in Orange County, California. Like, what does this mean to us, right? Our agent will see that and say, okay, let's create a workflow. We'll pull in some external data sets, such as are there trending lawsuits against this type of company, against contractors in this area? Is there third-party litigation funding that's fueling lawsuits in this area? And then ultimately, once we get to an analysis, the agent will produce a recommended action, and that could be, hey, let's restrict appetite and not issue policies there for the next 6 months, see what happens. But we don't just end there. The agent will then, again, having context of the business, will then simulate the impact of that recommended action using what if scenarios, sensitivity analysis, and so on. So that way the underwriter, the portfolio manager, can make that decision with confidence and effectively have a lot of data that's backing that decision.
Terrific. Thanks so much. So for the listeners who are hearing the term AI agent more often, how do you define it in the context of insurance? Like what makes it different from a traditional AI model or a dashboard?
Yeah, very good question. I mean, if you're a startup in 2025, everything is an AI agent, right? There's no shortage. I had no idea that AI agents would blow up as much as they did this year when we were looking at it at the beginning of last year, really, within this context. So the agent, what makes it truly agentic is is in the term itself, right? Does this AI, does the model, does the system have agency to decide the steps that will be taken to effectively perform whatever task it's set to do, and then produce the output? So that agency typically comes with having a proper context of the business, and again, that's where our knowledge base comes in. Like we spend time during onboarding to add in things like, what is the risk appetite for this portfolio, for this business, or what are the restrictions, what are the goals, right? All those things vary from carrier to carrier. They also vary from team to team, line of business to line of business, or region, for example. So having all that context, the agent is able to, again, use agency, decide what steps need to be taken, what tools need to be used to perform the duty. Very much, and I like it, my co-founder, our CTO, he says this all the time. He's like, hey, look, if we can teach a human to do this, then we can teach our agent to do this. And that's effectively what makes it agentic. It's very much, in our case, like hiring a mid-level or even senior data analyst.
Yeah, I think you gave a few examples there, but any other examples of why AI agents are especially well suited for things like underwriting, portfolio management, and strategic decision making?
Yeah, absolutely. So I would say looking at the insurtech and just the insurance industry over the last 5-10 years, in the last 5 years, we've really seen an emergence of using AI, even deep learning models, or even generative AI models to solve things like submission triage, right? So that's really on the transaction level where these submissions are coming in from brokers, and there's a lot of problems there, right? There's no shortage of issues there. There's a lot of solutions out there for that, a lot of really good ones as well. And these submissions are coming in, and we just don't have the human capacity to look at all of them. Having an agent, or really having an AI, whether if it's agentic or not, I think a little bit limited on the agentic side. But having an AI, again, use a rule system or a checklist or a sort of knowledge base to score each of those submissions as they come in, and then triage, decide which ones we're going to spend our capacity on versus the others. Like those are that's a great area, and again, it's an area that's been it's been addressed a lot over the last 5 years. The new frontier where we see insurtech moving in the next 2 to 5 years is really away from the transaction level and up to the strategic level, to the portfolio level, which we call it, or the portfolio layer. This layer is very it's very text heavy, right? I mean, it's insurance as an industry in general requires a lot of the ability to conceptualize and ingest a lot of text. That was not possible, not really in a scalable way, until language models made it possible within the last 2-3 years. At the portfolio level, there also is a component of strategy, right? So this is not necessarily just scoring something and saying, hey, this one's better than that one, just based on our rules. It's more so about taking the full context of what we're trying to achieve here, right? We're looking at all this text data and what we're trying to achieve, and then creating some actionable strategy out of it. That wasn't possible until reasoning models. So it really is this portfolio level, the strategic layer. It really is an open frontier, and we believe it's going to be the next wave of insurtech.
Okay, so we're talking about moving beyond transactional underwriting to strategic portfolio management. I think you gave the example earlier of the Orange County, California example, but could you perhaps walk us through maybe another real world example on how AI agents drive action?
Yeah, absolutely. So one thing that we hear a lot, and since getting started, we've interviewed over 300. We have 300 hours of interviews with the top 50 P&C executives, right? So we've looked at that, and we've seen which themes have been emerging. And one scenario that comes up often is, I'm a P&L owner, I'm a head of commercial auto, or a head of commercial property, or I'm a CUO, and I've been given a directive by the executive team to grow my book of business. We want to grow profitable, but we want to grow our book, but we want to grow in a profitable way. So let's say in a scenario where I'm looking at the state of Michigan, and we've left long haul trucking or semi trucks due to profitability issues related to ICE related incidents, right? A lot of semi trucks distracted driving, crashes, makes them an unprofitable risk class. But we do cover personal autos. So I can go to my agent. I'd say, hey, let's start a workflow. It's totally ad hoc, right? Not nothing that was alerted to us, but just an ad hoc investigation. And we want to ask the agent, hey, how can we identify attributes that can help us get back into the long haul trucking business? So the agent may propose, all right, let's look at our personal line autos and split them up. It may say, in a scenario that we use often, is it looks at those. It does a search. It looks at those personal cars that have snow tires. And those that don't have snow tires. It can slice that data up and produce basically what is the loss ratio for each of those segments. It may find that there's a 50% lower chance of loss for personal vehicles with snow tires. So then the user can say, okay, that's great. I think we found a potential driver. Propose an underwriting action, and the action could be, hey, let's move into one segment or one geography of Michigan for long haul trucking. And our new underwriting guideline is going to be only insure those semi trucks with snow tires. Well, we don't just stop it there. Then we ask the agent, okay, now simulate what is the impact to my portfolio? What's the profitability impact if we were to have insured only semi trucks with snow tires in this region over the past, let's say, 12 months, based on the submissions that may have come in. And then it would do that analysis, and again, we can go into that decision with confidence, but most importantly, we can go into that decision very quickly, right? Like that process that I just described right there. You talk to any CEO, they'll all say, "Oh yeah, that's weeks, months." I mean, I've got to corral a team of IT folks and underwriters and actuaries and on and on. And before I can even get an answer, let alone implement it, it may be a stale question anyways. So again, what we're doing is we're taking that process that could take weeks and months and making it into minutes.
So one of your platform's strengths is orchestrating workflows. So doing things like pulling from unstructured internal data, you talked about that a bit, but even from external sources like court records. So how does that actually work in practice for a carrier?
Yeah, so the way that we describe and they look at our platform is effectively a tooling system. So we're not coming in and saying, hey, we have the silver bullet data set and this is going to solve all your problems. That's just not reality. And even if you did, it wouldn't last very long because things change so much. We're providing the tooling for one to run these workflows, so the agent can again use different tools, different data sets. Many carriers have a lot of great data sets, right, that they're already subscribed to. So we have connectors that can plug right into those external APIs, pull those in, and basically pipe in that data to enrich our analysis that is happening. Now that said, we have several initiatives going on right now where we are building our own proprietary data sets, which will be evolving over time as the problems evolve over time. The first one that we're working on is around legal system abuse. So we're working with one of our executive advisors, was former head of global head of casualty for AIG. We're working close with him and a defense law firm based out of New York that are sitting on a lot of data, a lot of history, and we're working on modules to identify legal abuse within active claims. We're also working on a partnership right now with one of the leading universities, so their risk management and innovation institute there, to basically put together proprietary database data sets that will layer on top of our platform, so that way we can identify trends of basically trending or emerging attack vectors that third-party litigation firms are using that are funding. They're looking for those people and those companies in specific judicial hotspots that they can sue and get those outsized rewards. Well, they're using models to figure that out. What we're going to do, what we're doing now, is we're basically reverse engineering those models, so that way we can give the carriers weapons in their arsenal to combat it and be more proactive versus, again, getting to the end of the year and saying, oh, this is a problem, let's fix it.
Yeah, before insurance, you transformed credit underwriting for Fortune 500 banks. So what lessons from financial services carry over directly to AI adoption in insurance? Like what's different here?
Yeah. Oh, and what's different? Yeah. No, lots of lessons, lots of great lessons, painful lessons, all the above. It's funny. I promised myself I wouldn't go back into big enterprise. You hear those AI companies that have 500,000 users in 1 month, but here we are. It's interesting. And specifically, we were building identity tools, right, as part of the credit underwriting process to effectively help banks put profitable revenue back on the table, right? They were big issue that was emerging was synthetic identity fraud, right? And their response to that was basically tightening underwriting or doing their underwriting in a way that was not as sophisticated, that they were flagging good customers as fraudulent, and that was costing them in addition to the fraud, that was costing them billions of dollars across the industry as well. What we did there is very similar, good parallel to what we're doing today. We help them get a better look at that data, right? Identify those attributes that actually can prove their identity and make them a good customer. Basically, they stepped up into our flow. And we got them back into appetite. There's a lot of lessons. I think the first and foremost thing is in any heavily regulated industry, right, especially legacy industries that have been doing a lot of things really good for a very long time, there is an inertia to change because these things worked, right? The parallel that I'm seeing today is a catalyzing event, which was COVID for insurance, very similar to the catalyst that banking saw back in the late 2000s with the financial crisis, right? Again, big, healthy industry has been around for a long time. And this event happened that created all kinds of cascading problems, including public sentiment, that really kind of forced them to move and to evolve. And that kicked off the fintech revolution. We see kind of an insurtech revolution coming now, again, with that catalyzing event with COVID that increased pricing, hardened markets. If you're a big carrier that insures 10 million vehicles in America, and those vehicles are made of 60 or 70% of aluminum, and the price of aluminum goes up 30% over a couple of years, that's a big problem for those policies, right? So there's a need for them to move forward and to start looking at tools, technology to solve these problems, and make that evolution. Of course, trust and transparency is going to be key, and what we've done internally is set our posturing from the very beginning, the data security posturing at the highest levels from the very beginning. So, and we communicate that constantly, and it's also represented in the platform where their users always have visibility into every action, every tool, every piece of code that's produced, as much information as they want. Probably too much. We keep it very user friendly, but having that transparency is important because ultimately we want to trust the output. And if we're making decisions that are material, then we want to know what led to that decision. What's behind it.
Yeah, I just want to double click on the challenge of adoption. So when you're introducing AI agents into an insurance organization, what are the biggest adoption hurdles you see? You talked about trust, you talked about transparency. What about integration into workflows or just plain old, change management? And then how do you help teams overcome these challenges?
Yeah, I think with every technology, there's going to be an adoption curve, right? I mean, right now we've been super fortunate where portfolio management is on the adoption curve is very early. And those early adopters are the large carriers, particularly those that are more innovative, forward thinking. For a long time, forever in the industry, they could compete on pricing, a more transactional level, relationships, brokers, and so on. We're seeing is a lot of that is becoming commoditized, right? And kind of on a scale. Carriers now will be, and we believe that they're going to be looking at competing based on insights on large data effectively. Like where are the opportunities within our risk appetite that we're not paying attention to, or where can we expand to the fringe of our appetite, right? And take advantage of those areas, and that is those areas that a lot of carriers would have walked out of. And that's really, I think, what's driving the emergence also of a lot of these MGAs, right? A lot of these specialty underwriters who are saying, hey, we can get the technology, the processes, and the people to go find those opportunities and make them profitable again.
Well, Alex, we like to finish these conversations by looking forward and into the future. With AI, it's kind of hard to define how far we need to look, whether that's 3 years or 3 months, right? But when it comes to AI agents, how do you see AI agents evolving in the insurance space over the next few months and years?
Yeah, there's a scale that looks at the different levels of agentic AI. And really the capabilities with LLMs. If you think about where we started, we had deep learning models that were very, very deterministic, right? Very rule based. And then, LLMs came out and, you got to like level 1 where you can ingest text and, you can make sense of it and you can actually generate something from it, which is great for document extraction and, automating different workflows. Where we're headed now to, I think, level 2, level 3, even, and beyond, is again where the agents have developed the ability to reason. So we can take this text, we can decide what to do with it. As it progresses and as these models get better and better, the capabilities of that reasoning and the tools that they can use will only continue to advance. I think it's the most exciting time that, at least in my career, we're working with enterprise software, because when you adopt the platform today, it's not just it is what you get, right? Like you think about traditional SaaS platforms where it's like, okay, yeah, there'll be incremental improvements on this over time, and that'll largely stay the same until somebody comes in and replaces them. Today, there's a space race with these models that are underlying platforms that vertical AI companies are building a lot of software around. A lot of capabilities so that way it fits and it makes sense for the enterprise. But those models just keep getting more capable and more capable. And so what we see today versus what we'll see in 2-3 years will be entirely different, right? And even a lot of that driven by, again, those models that companies are putting tens of billions of dollars into in this sort of space race to make the best AI model.
Alex, that was great. Is there anything that we didn't cover or that we missed that we should touch on while we have you?
No, I think we covered everything. I appreciate again you invited me to the podcast and really enjoyed our conversation.
Well, thanks so much for joining us today. That was a fascinating look at AI agents with Alex Valdes, from uncovering hidden premium opportunities to orchestrating complex investigative workflows. Alex showed us how AI agents can give carriers a real strategic edge. If today's episode resonated, make sure you subscribe to the JD Power AI and Insurance podcast and share it with your executive team. I'm Michael Vermillion, and we'll see you next time as we explore more ways AI is rewriting the insurance rulebook.